Okay, recording this video after close of trade Wednesday, 1st of June 2011. This is going to be an important video, so I also think you need to hold on to your hats going forward because we're going down. And I kind of wish I'd put a video out on Monday. I was traveling down to Melbourne on a business trip, just got back for last night's trade for me, which was kind of good. Got something out of that move. I was looking for a 2% down move, got it in the wrong week, got it this week instead of last week, but boy, you could see this thing being set up by the professionals just clear as day after Tuesday trade. Let me show you what I'm referring to. This is my average trade size chart, and it's a 130. On this particular chart, it's a 135-minute chart. So there's 3 of these bars per day. So this is the activity. Last 3 bars is the activity of today. This bar was the closing bar on Tuesday, and look at the average trade size. This thing stood out like a sore thumb. Last time we saw kind of average trade size like this was right up here at the peak, and that's what led to the decline on Wednesday. I mean, it was a 2% plus decline on Wednesday. The way they set it up on Tuesday was just, a beaut. It was after the Euro news, the kind of so-called bullish kind of Euro news coming out of Germany, with the Angela Merkel kind of stepping in. I'm not sure exactly what she's doing, but they're trying to, like hell, to rescue the Euro. They gapped the market up, and then they pushed it up again. When we look at the lower time frame tick bar chart, you can see all the professional activity at the end of Tuesday, and that's what it was. All of this kind of average trade size, sticking out like a sore thumb. So I hope if there are other kind of traders out there who measure average trade size, I hope you caught this. Anyway, let's go forward a little bit now. Better X trends. This is the trailing stop under a kind of a exhaustion volume kind of based trailing stop. We came back up to test over Tuesday's trade, and you can see we closed just underneath the lip of this trailing stop, and now today, bang, with this activity down, we'll follow this kind of trailing stop all the way down. So we tested right up. It's a classic. We tested right up to that kind of stopping level, bang, and went out under the lip. So this has got a ways to go. That's like the first kind of real. This was a little bit of a test here, kind of testing back, but this one coming right up to that level like that, for me, that's a really kind of significant test of that level, and now we'll be kind of moving down. Trendline chart, weekly trendline chart. We've gone through our weekly kind of consolidation. The last couple of weeks were white bars sitting inside the apex of these trend lines. We're now kind of reversal bar, kind of started up above it, now closed below this. So we're now below trend lines on weekly charts. So these tend to be kind of bigger moves. Break it down to the daily chart here. You can see, false breakout, bang, all the other way. We're just sitting at the close on this bottom trend line here on the daily chart. On the 135-minute chart, this is this island reversal that I've been talking about. I suppose this surprised me, the strength that we kind of came back up to. We didn't need to do that. I think we just would have crested to close the gap a little bit and kind of move it down. But it's just classic using some kind of good news to get traders kind of faked out and caught in wrong positions. And I feel sorry for anybody who's kind of buying equities on Tuesday or buying into positions on Tuesday. I think you just got kind of hoodwinked by the pros. Better volume, 2.3 million contracts traded per day. You can see we're now closed below cyclical support on better trend line on these time frames. So next stop down. Hypothesis chart. So this was, we got this break back up, retested the highs, pushed higher than the previous highs, which kind of gets people into warm and fuzzy feeling with this kind of island reversal here. And now we're breaking below this support level here, and so we'll be looking for a downtrend move on the daily time frame, which will end with a pullback and an end of trend. So we got a lot of damage to see, a lot of bad news to come out, and just expect the next 2 months to be really rocky. But where are we going on the weekly charts? Now this is where I think we're heading down to. We'll stop. This move will stop when we get and there'll be pullbacks and bullish days along the way. Don't get me wrong. This is all I'm saying is is the tenor of the market will change dramatically over the next 2 months, and the news will come out to kind of support that. So just expect bad news. If you've thought we've had bad news over the last couple of months, I think it's going to get worse. Anyway, where this is going to stop is when we get a cyclical cross on these weekly time frames here for the indices. So you can see this is a chart of the Dow. Don't usually show these charts. I have these on kind of daily and weekly kind of setup. We had our exhaustion buying. We've had our bearish divergence. This is what we're setting off, and we're coming down. We'll rest when we get a cyclical turn on the weekly time frame here on the Dow. Same thing with the S&P. Had this kind of bearish divergence, very weak buying up here. This will kind of start to, these two lines will start to converge in the next few weeks when this support level comes in, and where it happens, it'll be anywhere between now and 1100 on the S&P here. So who knows where it will eventually end up. Nasdaq, same thing. You can see kind of making these new highs, weekly highs, bearish divergence. We've just been running out of steam, and again be looking for that kind of cross. And lastly, Russell. Russell, we don't have volume data here, but you can price the chart the price cycles. So again, these lines will start to converge, and you can see this little blue line is starting to just kind of turn down here. Then looking at the other markets, I mean, we were on an absolute tear when it came to the bond market today. It just took off, and harping back on this end of trend that we've been setting up since the beginning of the year. This end of trend exhaustion selling, pullback testing, no supply, Emini down bars here, bang, we've taken off. We've now broken above cyclical resistance on the daily time frame here. We've had our exhaustion buying kind of setting this move up. We're now on a tear in terms of trend lines on, and there'll be a move back into bonds. And it could be that it's all coming out of Europe. It's like, people might be swapping their European sovereign debt for US sovereign debt. So we're going to see continued strength in the bond market. That's the 30-year bonds. This is the 5-year. I mean, look at the 5-year just going like gangbusters. And then the 10-year also strong into strong uptrend. So these will end when we get pullback and end of trend moves. And then lastly, dollar index. You see, dollar index has been quite interesting. This was setting this move up. The test back down. We've got a cyclical cross happening here. The last couple of days, amateur down bars into these lows, just testing back into these lows. Quite a lot of kind of selling on the downside here, but that's enough to kind of flush people out. We'll have this cyclical cross kind of form here, form support on dollar index, and we're going to have strength in the dollar index. Now, what that will mean for all the commodities was they'll start to come down, and let me show you, I was talking about this on the weekend's video. We've got these cyclical turns now actually starting to play out. So this is crude. Talked about this on the weekend. There's our cyclical cross happened here, so it's confirmed a resistance level here with the cross of better sine wave just cycling through this. Gold, here we go, end of trend warning signal on gold, and you can see the last push back up to 1550s. Emini up bars coming in here after we've had exhaustion buying, flush signals, bearish divergence, bang. So I think with strength in the dollar, gold will just kind of come down because gold is the anti-dollar. Gold will come down, and all the gold spruikers expect a lot more commentary from gold and silver kind of spruikers coming out and saying, "Oh, this is a fantastic buying opportunity. You've got to get on board now." I don't know. All I'm saying is for the next 2 months, I'm going to be looking for the equity market to kind of head down, bottom out when we get those weekly crosses, and then head back into September, October. Finally, do a final peak in terms of the weekly charts, in terms of end of trend warning signals there, and that'll be the real kind of high. But for the time being, the next couple of months, I'm just looking for weakness. And Aussie dollar, Aussie dollar's been relatively strong. We had some extremely bad news in terms of GDP here. If anybody kind of follows that, probably not. Who cares about Australia? But in Australia here, we blamed I think it's the worst GDP number in 20 years. We blamed it on the weather, which is it couldn't be that the real estate market has finally run out of puff in Australia, or that China's suddenly started to buy less of our commodities. No, it had to be a bad weather that stopped the economy in its tracks. The worst GDP print in 20 years. Aussie dollar, so we'll be making a cyclical cross on that, and I've shown my kind of M3 differential chart on the Aussie, just showing that it's been kind of overbought for a good 4 or 5 months, so that'll start to go the other way. Copper. So copper, we've already had this kind of cyclical cross, and we've been talking about this. How copper kind of maxed out with an end of trend and a flush buying signal here, and we've been in a downtrend in copper since February. And you can just see how weak this kind of move was, and we're just kind of rolling down. So this isn't going to be over until we get exhaustion selling on the downside. Euro. So cyclical cross on euro kind of happening here. So that will stop this move kind of in its tracks. Silver, we got the cross a couple of days ago. Just up here you can see that on terms of silver. Wasn't an end of trend just because it was a dirty kind of pullback level here that kind of got violated. So the gold was a clean kind of end of trend signal, silver wasn't. And then back to crude. And then just lastly on the 4,500 tip bar chart, so this is the activity over the last 3 days. So this was today's activity where we kind of sold off big time. But this is Memorial Day weekend. This was kind of the so-called rescue, Germans to the rescue, European kind of news. They gap it up. A little bit of profit taking, come back in to close the gap here. Professionals kind of step in, and look, they pushed it way back up to the 45s, and look at all those blue professional bars, and these were huge readings on better momentum. I wasn't trading on Tuesday. Huge readings on better momentum here, and the professionals kind of taking it up all the way and taking profits, so that they kind of set this thing up for huge decline on the Wednesday. I'll tag on my day trades, not considering that was the 2% down day, and he took out 4.75 points out of the day. Would have been nicer taking out more out of that, but at least I was on the right side of this move. I took profits before the ISM manufacturing index number came out at 9 a.m. and that was a shame, because that move really kind of set things off. That was this kind of breakdown here, really got this kind of move going. So anyway, there we go. A little bit of a longer video today. Hope you're enjoying your trading. It's gone short 39.75. And the reason I'm going short, had exhaustion buying on the upside on the 500 tip bar chart come around and made a bearish divergence. So we kind of head up to this cyclical turning point, kind of amateur bars kind of kick in. Got a downside bias after yesterday's activity at the end of the day. Huge amount of professional bars kind of selling the close. So now I'm kind of trading against the 4500 tip bar chart, but I'm hoping that we'll have a sweep down on this 1500 tip bar chart. So let's see, just short 39.75. Okay, that's a good sign. 500 tip bar chart. We just had a flush signal kind of come up. This is we tested back up to 40.75. A little bit of excess kind of buying volume, flushing out the last of the buyers. So hopefully now it should kind of turn around. Although with this amateur down bar here on the 1500 tip bar chart, with cyclical support kind of coming in soon, if we break back up above 41, we might go for a little bit of a run. But anyway, let's just see if that does enough damage in order to get us down to this break at 39, at 38.25. And the reason for coming out now, we've had end of trend warning signal coming on the 1500 tip bar chart. A whole bunch of blue professional bars kind of coming down here. Had exhaustion selling on the 500 tip bar chart. Which looks like we might be making some kind of double bottom kind of down here, maybe kind of reversing, going the other way for a bit. Just trying to get a decent exit on this, but I think that's as good as we're going to do. Be a kind of a bullish divergence signal on the 500 tip bar chart. Just don't think it might run a little bit longer, but not much. So what's that? It's only 1.5 points. Let's wait and see. There we go. Bullish divergence kind of come in. There's maybe a little bit of a better exit. So hopefully this will hold. And here we go. So that's a pro-cycle exit just came in. So exhaustion selling on the downside with blue professional bar kind of down here. So I should be out. This didn't run very far from the entry at 39.75, but that's okay. Let's just see if this kind of sets up to go the other way. Very annoying. The ISM manufacturing index and construction spending came out at 9 AM. That was pretty bad. And we just sold off and hit the original target, the 4-point target, when we were short at 39.75. So We've had end of trend on the 500 tip bar chart. Exhaustion selling down here. Would have thought we'd have caught a little bit more support than this. And we're traveling really quickly right now, so let's wait and see for the next kind of setup. But we're kind of down below support on the 15 and 4500 tip bar chart with there's all these blue professional bars, so just have to wait and see. That was annoying in the extreme. It's gone short 35.25 and just trying to get on board this kind of strong trend move. We're down below support on the 1500 and the 4500 tip bar chart. All these blue professional bars kind of come in here, so we'll find some support somewhere, but not yet. So reason for getting short of this cyclical turn on the 500 tip bar chart. The move back up to test this 36 level, being led by the amateurs. So let's try and pick somewhere to get out where we get kind of exhaustion selling on the downside. Target's at 31, but that might be a little bit of a stretch. A couple of minutes later, we kind of tested back up close to the entry, and this time around we've got all these blue professional bars kind of coming on the 500 tip bar chart, but none on the 1500 tip bar chart yet. So the target's at 31.25, so I've not touched that. And it looks like this next push down we might get taken out, hopefully. Got exhaustion selling on the 500 tip bar chart, and we had a flush signal, but nothing yet on the 1500 tip bar chart. So let's try and, here we go, first blue professional bar. So let's try and get taken out down here. It came out at 32 even, so that's not bad. We touched 31, didn't get taken out on it, but just getting a little bit nervous here. We've got exhaustion selling down here, bullish divergence, and the first blue professional bar kind of coming on the 1500 tip bar chart. I know we're way below support here, so we're in a strong downtrend. Oh, we're going to get taken out at 31.25. Done. But anyway, that's okay. What was that? That was 3 1/4. So that's not bad. So I'm happy with that after a 1.5 on the first trade. So that's good.